Hi there, welcome to IFA Insights, where we explore ideas, strategies, and conversations shaping the future of independent financial advice. Today we're taking a closer look at a topic that plays a critical role in the success of any advisory practice, the asset management. Specifically, we're going to examine the potential benefits of outsourcing the investment management and why it could be a really good strategic decision when it comes to growing your book of business. Independent advisors juggle many responsibilities, from client service, compliance, to marketing, and obviously their own business development. Investment management sometimes can just become one of those competing priorities. Outsourcing this function offers a way to reclaim your valuable time and focus on what matters most, building those client relationships. Today, we have Nick Moore. He is the Director of Trading for AIQ Asset Management. Nick and his team support advisors nationwide with a disciplined, data-driven investment process that integrates market insight with advanced technology, better known as AI, and their approach goes way beyond traditional asset management, where they deliver a very consistent, thoughtful portfolio management product. So, Nick, welcome to IFA Insights.
Yeah, thank you. Excited to be here.
Excellent. Do you want to give us like a quick background of your experience and how you ended up in your current role?
Yeah, absolutely. Bit non-traditional. So I guess, go all the way back. I started my career in the low rungs, Schwab, as a broker, which is more or less glorified customer service in a call center. Worked my way up over there into kind of an intermediary role between trading operations, back office, and all the brokers, client-facing roles. So from there, I switched over to institutional world, got into a boutique hedge fund in Austin that was consistently punching above its weight. Artemis Capital, I started an operations role there, kind of the junior lowest man on the totem pole. Eventually worked my way up to take over their trading desk. And we were trading derivatives. We were vol traders, which is a nerdy way to say we try to make money for our clients when the markets crash to help offset losses.
Gotcha.
I joined up with AIQ from there, and my skill set kind of lent to fill in gaps, and kind of helped us build out the full picture that we're executing on today.
Perfect. So let's kind of circle back to our topic about investment management. Advisors are notoriously attached to this piece of their business.
Yes, they are.
A lot of them say they really enjoy managing money, and then they kind of have that fear that that's what the client expects them to do, rather than something they can outsource. So knowing those fears, why would an advisor even consider using outsourced management?
Yeah, we hear that a lot. The list goes on and on why they consider it. To start with, because there's benefits to the advisor in their practice, and then there's benefits to clients. Both are important. Obviously, the client comes first. Mm-hmm. In terms of the client side of things, we have a skill set and expertise, and there's more of us than there are in an advisor practice. We have experience that isn't normal in the advisory world. My team largely comes from the institutional world, where we were managing money for pensions, endowments, ultra high net worth investors, billionaires essentially. Mm-hmm. The strategies employed in that space you don't frequently see in this side of the world, and we're trying to bring that to the advisory space. So most clients aren't going to get access to kind of the types of things that we're doing. And even if they can get access to it, they don't have the expertise behind it and the same way of thinking about what we're doing. So clients are going to get more sophisticated strategies, and I can kind of go down the rabbit hole, but needless to say, the end result is we're generally going to smooth out returns, so that way we try to minimize drawdowns. We do sometimes give up a little bit of upside participation, but the ultimate goal is, everything we've done has been catered to this space. The ultimate goal is to increase the probability that clients actually meet their goals. Those whether that's retirement goals, legacy, that's what we're trying to do. Because as we all know, the sequence of returns are, can can hurt you. And if you get a large drawdown right before retirement, it's not so great. Same thing with if you're a young investor that's accumulating. If the markets are rallying when you don't have a lot of money and then they trade kind of sideways, that's an issue. Yeah. It kind of changes your entire plan. So from the client perspective, we're doing a lot of things that an advisor can't do on their own. We're watching options markets. We're having banks bid on custom notes that we're doing. We're managing across the board all asset classes. We have individuals who are experienced in each of these asset classes. It's hard to know everything about markets all the time. An advisor needs a partner to help out with that. Generally, especially in the independent space, advisors have maybe 1 to 5 people on their staff. They don't always have the same market expertise. And so it's hard for, a couple people just to have a good grasp on markets as a whole. So it's good for them to partner with somebody for on their client's behalf.
Yeah, absolutely. I think we've learned over the years, and countless studies have showed that the best entrepreneurs know what they're the best at and what they're not, and they hire or outsource to the right people
Exactly.
for the things that they don't excel at. So,
yeah, and I wouldn't, I wouldn't try to, create financial plans for our clients. When it gets into the nitty gritty of small business tax plans, that's outside of my wheelhouse. I'm better off hiring somebody for it. So it's a similar situation. And
I might know somebody.
I'm sure you know a few. If I can expand, if you don't mind, on the advisor side of things, because it's, we try to help everybody, including the advisor's practice. We try to be an extension of their team. If you are a 3-person advisor shop, add our 6 individuals, to your team. Allow us to constantly watch markets for you. For the advisor standpoint, it takes a lot for advisors to do everything that they have to do. They're doing financial planning, tax planning. They're meeting with their clients, they're prospecting, they're marketing themselves, they're managing their team, they're helping to develop their junior advisor. They have a business to run on top of all this in terms of on top of doing their day-to-day job. For them to also watch markets 24/7, because it's, markets are 24/7. We're in a global world.
Yeah.
It's a lot for them to take on. A lot of times if they stretch themselves that thin to do all that, the best you can hope for is you're doing kind of an average job on all that. Generally, people are better off if they, focus. They say, this is what I do best. I'm going to do that best, as you alluded to, and I'm going to pick someone else who focuses on something else, a different aspect of the business. So we can save advisors a lot of time. They don't have to worry about the trading. They don't have to worry about what NVIDIA is doing, what these earnings are coming out. We have that handled for them. You just, the advisor focuses on the business, focuses on their clients, spend more time doing that, and stop worrying about the markets, because we have that taken care of for them.
Yeah. So let's talk a little bit about how it would actually work to partner with AIQ.
Yeah.
What's the onboarding like? What does a day-to-day collaboration look like? And let's factor in the fact that advisors probably want to know what's happening. They want to be connected to that information.
Yeah, so it varies advisor to advisor. And, from a broadly outsourced asset management perspective, you're going to have different experiences depending on who you partner with. Right. We try to take a more hands-on approach with our advisors. Try not to make everything cookie cutter. Every advisor, they run their practices differently. So we try to mold into them versus trying to get them to mold our procedures. So it's going to look a little bit different depending on the advisor. So we have meetings, generally a few of them, where we're meeting with the advisor, we're meeting with their team to figure out how they operate, how they want to do things. And we get a better understanding on how they approach their planning aspect and how we can fit into all that. So we need to introduce ourselves to their teams and kind of walk them through some of our workflows, but we're flexible. We can communicate via secure message. We can communicate versus the advisor CRM. So we try to, after getting an understanding of what the advisor's trying to accomplish, we try to map out all their accounts, work with them hand in hand, based on the strategies we're good at, we execute on, and try to figure out what's best suited for each individual client. Once we have that kind of laid out, we figure out, okay, what sort of tax implications are going to be involved in this? Are there any accounts that are a little bit more sensitive to this? And what sort of turnover are we talking about? Are there illiquid positions we need to kind of work around? Then the next step is to kind of move it on to the actual execution piece. We always have advise advisors to go slow from the start. It helps everybody get oriented, help everybody get used to the workflows. And it's, for an advisor, it's a big step. You're transitioning your entire book. It's a lot to do at once from a workload standpoint, but from a trust standpoint, start small. Get a feel for how it's gonna, how things move. And then from there, once you're comfortable, you can start moving a little bit faster in terms of moving your accounts.
So obviously advisors are at a lot of different stages in their business. Can you tell us about a real life example of a group of advisors that you work with where they decided to outsource their money management and had a really big impact on their book or their growth?
Yeah, absolutely. That's my favorite part of the job. Seeing some of those transitions and changes. One comes to mind. Was actually one of the very first advisors that started working with us. He was managing money on his own, spending a huge portion of his day doing that. Very small team that was with him. And, he had around, I think it was $30-40 million when he came to us. Started slowly moving accounts to us. You got to build trust. And we were, fairly new in the space from the start, so I don't blame him whatsoever. And, we wanted him to move slowly because, we were getting things up to speed ourselves. So started moving slowly, and then one day he kind of realized, I can't churn that part of my brain off, worrying about markets, worrying about what's going on, worrying about what's in these accounts and investing, until I'd move everything over. Because that's really, once you turn that side of the brain off, then you can focus all of your attention on deepening those relationships, spending more time with your clients. Mm-hmm. So he then made a big shift and gave us everything, essentially 100% of his book. After that, he spent more time with his clients. His referrals started spiking. He had more touch points with clients. He was doing deeper planning. He was marketing himself more. His book tripled in size over the next couple of years. And which, I'm not going to say that's the base case for everybody.
Yeah, no guarantees.
He was hustling during that time period. And so he tripled his book. He then sold it, kept it within the family for himself. That having us manage the assets made that transition much easier. I'm a little biased, but he was able to go to his clients and say, hey, your accounts are going to stay the exact same. I'm going to step back a little bit. My family members are going to step in. You already know them. They have a transition period. He brought them in ahead of time. And, you're just going to be talking to new faces, but everything on the back end is the same. Mm-hmm. Your accounts are invested the exact same way because we're sticking with AIQ. There's not going to be any shuffle there. Whereas a lot of times if you sell your practice, they start churning over accounts. You get new managers, new style of investing. And it's a bit, quite a difference for the client. Yeah. This keeps things as similar as possible, just a new face, to talk to. So it was pretty successful for him from what he tells me. He's always bragging about how he handled it and, attributes it probably more of his success than he should to us. He was out there hustling as well, but it's been successful for him. He was able to retire and, his clients are taken care of.
Yeah. So let's flip the table a little bit. Let's say you're an advisor and you're starting to look at potentially outsourcing your money management. What kind of things would you be looking for if you were on the buy side?
Yeah, that's a great question. So you need, trust is a big thing. You need to find a team that can work with you, fits your firm. There are a lot of companies out there that you kind of have to change your practice to fit what they're doing. So for some people that's completely okay. Sometimes, the asset managers out there, they usually have standardized process, trial and error. So it can help sometimes improve your processes, make you more efficient. But sometimes that's not what you want. You sometimes don't want your clients to see a lot of change. So look for a firm where that fits your personality, fits what you're trying to do. Maybe meshes a little bit with how you're already managing money. Because if you go from one style of investing, you've sold your clients on that, you go to something completely different, there's a little bit of education piece on there, which is completely fine. If you can say, hey, these guys are better at it, this is why I'm changing, that's completely fine. There's going to be some advisors that push back a little bit on that and want something a little bit more like. It just kind of depends on, what fits your practice and your clients. Another aspect is you want a team that has the experience you're looking for. You don't want somebody who, is relatively new, hasn't, it's helpful for somebody that has a wide breadth of knowledge in the space. For us, for instance, I mentioned we have institutional experience. We've seen how, $100 billion pensions manage money. We've seen how, $1 million client manages money, a $200,000 client manages money. We're able to take the best of all of that and kind of bring those ideas to kind of fit everybody. So you want somebody who's going to be creative for you, somebody who's going to be flexible, and somebody who's nimble. I personally think markets, the last 20 years aren't going to be the same as the next 20 years. Yeah. So you want somebody who has, understands financial history, understands how markets work, and has a team that it kind of complements each other and complements you and your own skill set.
I've got one more question for you.
Yeah.
What about cost?
That's a great one I left out. Cost always comes up. It's sometimes one of the first questions that's asked. It's tricky because there are some very low cost strategies out there that don't take much, their overhead's low, it doesn't take much to run them. Some of them are just set it and forget it. And then there's some higher cost strategies out there that are very active. The reality is you need to couple costs with performance and, I guess, how well this asset manager matches your practice. Because it's, you can pay a little bit more, but if they make things super easy for you as an advisor, that may be worth it. Mm-hmm. If you're paying a little bit extra, but you're saving an hour every day on, tasks that you have to do, then that hour can be spent prospecting. That hour can be spent talking to your clients a little bit more, unlocking value for your clients. Because the reality is there's benefits to both the advisor and the client, but what matters the most is the client. So you need to look at their performance. What are they doing for your client, and how does that match up with the costs that they have? Look, what sort of alpha and edge do they have on the investment side? Mm-hmm. And that in combination with how much time they save you, that's what you want to look for. If it's a passive strategy that's very low cost, but it's hard to work with that firm, if they're slow turnarounds, it takes them 3-4 days to do trades. That's not a great experience for your clients. Sometimes rushes come about. You need an asset manager that can work with you on that. Yeah. Sometimes things come up and, hey, I'm closing on a house tomorrow. I need this money. I didn't realize how much I need. I need you to raise a little bit extra. If your asset manager can't accommodate that, that could be a problem. You don't want to lose a client because of outsourcing. You want it to complement everything you're doing.
What about internal expenses for the clients?
Yeah.
Especially with outsourced money managers, there's a big range there.
There are. So you have to look at all-in costs. We try to minimize, our underlying expenses, AIQ. We try to use as few funds as we can. We have an expertise in managing small cap, managing bonds, large cap. So if an account can accommodate it, we'll do the individual stock selection, bond selection to avoid all those ETF mutual fund fees. There are plenty of asset managers out there that say, hey, here's a model, it's completely free. We do the asset management for you, but you dig under the hood and you're paying 70 basis points for it. So you have to look at the all-in costs and get a feel for that, and look at transaction costs and things like that in conjunction with what your custodian charges. Sometimes, sometimes asset managers don't necessarily look at what you as an advisor pay or your client pays from a commission standpoint. So you want to make sure that's part of the onboarding process, figuring out what those underlying fees are so we can optimize what we're doing. But yeah, those underlying costs are expensive, and it's not just from a raw cost. This is the expense ratio of this fund, but it's also, if your client is, or if your asset manager is using a lot of mutual funds, there can be some tax implications there. A mutual fund that has a huge redemption in it has to sell.
Yeah.
They may be selling things at gains. Your client may not have made a single trade that year, but they're going to get surprised potentially with a tax bill at the end of the year when those capital gains get distributed, because that's what mutual funds are required to do by law. Mm-hmm. So you want to make sure you look at the full scope and the net after tax returns.
Perfect. Well, Nick, thank you so much for your time today, and thanks for giving us all this information on how to outsource your money management and all the points as to why they should consider adding in a partner. If you're an independent advisor watching this and you've been wondering how to give yourself more time back in your day, outsourcing your investment management may just be a solution you should start exploring. At ARC, we leverage our partnership here with AIQ so our advisors can spend more time where it matters, with your clients. Be sure to subscribe to IFA Insights for more candid conversations with experienced industry professionals. We'll see you next time.